everybody, to another episode of Fintech Fridays. We are going to take a little turn today. We're going to still talk tech, but we're going to talk tech and compliance. And joining me today is Al Pitzner. Al is managing director, and Al, correct me if I'm wrong, but I believe you're also a co-founder of Conforma Compliance Group. Is that right?
Yeah, thanks, Brian, for having me. And that's right. I went a little bit crazy one evening and decided that we would form a compliance consulting and management company, and here we are. So
here we are. Is right.
Yeah.
We've gotten to know each other a little bit here over the last half a year or so.
Yeah.
A couple of these Zoom type calls, but also at some events. And the more I think about it, especially in this environment where companies of all sizes in our industry have had to get smaller, get leaner. It puts there's a definite need to still have that expert resource and access to expert resource. And I love what you guys are doing. I think the timing for what you're doing is perfect. We are in Masters season, so we've got Al repping the Masters swag, which is awesome.
It's coming up. It's going to be exciting.
Yeah, it's like that. There's a couple things that are happening. So we're recording this today, which is MLB's opening day, which is also kind of a big rite of passage for us in the upper Midwest. It's like the first official sniff of spring, even though it's cold here still.
A little bit here too. Yeah. No.
And then the Masters to me is always like, okay, winter's over. We are officially out of winter.
No, yeah, you just never know what's going to be going on down there. Last year, pouring rain from the majority of it, and Sunday the clouds parted, but that's spring in Georgia.
I'm pretty sure, Al, we could probably do an episode and just talk like Masters, and we'd have a lot of people interested in that. But that's not.
We could absolutely do that. Yeah, next time, next one, we'll put it on the calendar.
Absolutely. So let's just talk a little bit about. I'm always fascinated with founders and co-founders and kind of that. Your own process that you go through to, kind of decide and then execute on the plan to start a business. Can you just share a little bit about your journey to what is today Conforma?
Yeah. So I have been in the industry for a long time. I think it might be my 29th year doing it. And spent about 10 years of that on the origination side, so on the business side of the house, and about 15 years of it was spent in compliance, and a majority of that as a chief compliance officer. So, it's exciting, certainly being in house and managing that process for a servicer and a lender. But there was so much more I felt that could be done on the outside, and so. I talked with a few folks with whom I'd been working, over the course of the last 3-4 years, and then another chief compliance officer, and they all were excited at the prospect of kind of getting out of the in-house side of stuff and doing something different. And we had a lot of ideas about how we thought compliance could be dealt with, as opposed to how it's typically looked at, at least over the course of the last, say, decade, 15 years. So that's kind of what the genesis was. It was just a lot of thinking about how to do it in ways that it wasn't being approached from today.
So I'm going to make some guesses because I sat in the lender seat for a long time, almost 3 decades.
Yeah.
And for the most part, we had in-house everything, from compliance to legal to enforcement, even. Yeah. And so it felt like a lot of times as the head of production or representing production, going into meetings where your peers, counterparts on the legal compliance side, it almost felt like you were defending yourself before conversations even started.
Oh yeah. Yeah.
And as I thought about, our conversation here and the way you guys are going about your practice, it's a lot different when, as a production manager or a business owner, I'm seeking engagement from somebody like Conforma to help address, potential risks and problems and things, versus getting called to the office on the 3rd floor, knowing you're about to get get dressed down. So I'm guessing
Yeah.
there's just a different engagement dynamic that you see as a consultant partner versus, an internal partner.
Yeah, I think that's true. I think, internally compliance is sort of the no factory, and we're really good at that in many cases. And I think there's a lot of emphasis internally, within compliance departments to sort of focus on that and really take their responsibility seriously. You want to dial down risk and failing to remember that, hey, it's an enterprise. We got to make money, and you got to be a bit creative at times. Um, I look at mortgage as sort of a three-legged stool. You got business units, you got risk, and you got compliance, and you got to have all those legs there. And if you don't have it, you're not going to be doing business for very long. And I think the awareness of that is still super present today. And what I've seen, particularly going to business conferences, is I'm being approached consistently by folks who want help.
Yeah.
They want things to work out. They're paying attention to their responsibilities, but they're super resource constrained. And so they're trying to create efficiencies and find ways to make things happen, and maybe with a different point of view than the in-house point of view, maybe with some I don't want to call it objectivity, but just a different way of viewing some of
Right.
the issues. So that's how we're being approached, and we're being approached very frequently with those sorts of questions.
And I would guess that, in that seat that you sit in, if someone's just coming to you as a business looking for you to say no, then they don't really need you. They can say no themselves.
That's right. That's right.
The nature of the relationship is they're coming to you to look for compliant ways to do things that are going to
Right.
keep them out of trouble. And so I think that mindset just a little bit different than you typically would have in an in-house relationship. And I'm not knocking in-house compliance. I get it. I know the important roles they play. It just seems like it's different. The relationship intuitively is just naturally different.
It is naturally different. I think sometimes what's happening is you've already interfaced with in-house folks, and maybe you don't completely buy their perspective, and that's fine. There's always tension there, and that's not wrong. But maybe you want to bring a fresh set of eyes to the issue, and maybe have our team interface with the in-house team to maybe think a little bit differently about how we could approach a given issue. And we really look at compliance as being a tool to help businesses create some sustainable growth, because if you can't function without it, but you've got to have the right efficiencies to make it work.
So, we're in this, still in this very interesting time in our business. We're not out of the woods by any stretch in terms of, the challenges and the margin, compression and all the things that are happening there. But here we are, spring of 2024. What would you say are the top 2, 3, big issues that you folks are addressing with your clients today? Or is there not really 2 or 3? It's just kind of all over the place.
Fair lending is something that's on everyone's minds all the time.
Mm-hmm.
It's a little bit of it's a bit of a whack-a-mole sort of issue to some extent, because you just don't know where it's going to come up and what context it will come up. But there's a lot of concern there. It's concern from the IMB side, from the credit union side, from the bank side. So that's a big one for us. I think we're a little bit early still in the year. People are, I think, have not yet kind of felt what the trends will be on the state enforcement side. People, it's funny because you go to business conferences and folks like to talk a lot about what's happening with the Bureau, and we have to be careful about the Bureau. But frankly, the Bureau's done most of its work already from a mortgage perspective. What we don't appreciate as much, and this is where our costs are from an industry standpoint, is state enforcement. State enforcement is by far and away the biggest, most dangerous element of risk for IMBs in particular, and obviously for state banks. So you really have to pay attention to that. You got to have your hands on the origination rules, the servicing rules if you're a small servicer, and be prepared for the state exams and the outcomes of those exams.
Yeah, I've seen you've seen a lot of consolidation and aggregation happening around the space, but even then I'm seeing some newer companies kind of come out and start up, and I'm hopeful that they are all going into this eyes wide open, thinking about, the resources that either they don't have in-house or that they need to have, access to. So I'm curious if your engagement is with any, any new codes that are kind of coming into the business as we sit here.
Surprisingly, yes.
Yeah.
And in fact, I have a call with someone doing exactly that on Friday, and we're starting a new engagement with another company that's doing it, and a lot of creative thinking, interesting ideas, and frankly, I applaud the idea that you want to get it right from the get-go. You're
Yeah.
preparing for it. You're trying to be mindful of your of the unknown risk that you might be creating. Get your hands around it early. So. There was, at the Structured Finance Conference in Vegas here recently, we're seeing a lot of creative thinking, again, thinking that
Yeah.
would remind you of years gone by.
Sure.
The Neg AM is back,
I heard.
yeah, so I don't know where we're headed exactly, but there's a lot of excitement ahead for sure.
Yeah, I don't think it's it's not going to be just like vanilla, vanilla times ahead. It's
No.
these are those challenging markets where you have to get creative. You have to think as far outside the box as you can, and that's when you have to have the guardrails and the the compliance and legal resources.
Well, I would add to that. You have to have explanations, theory about what you're doing that makes sense to regulators. So
Yeah,
when they come in and you're doing something out of the box, you better have a really good explanation for why it's not a problem for them.
right.
And I think getting ahead of that stuff, really having narrative explanations that you can provide to folks is a really good tool to help avoid some of those problems you might have otherwise.
So most of us think about compliance in the context of making loans, right?
Right.
And the rules and regs and guidelines and do's and don'ts and all that. Fewer people, I think, are really understand that the technologies that you bring into your business also have inherent risk,
Yeah.
and they need to be almost equally evaluated in some cases with that compliance lens. And
Oh, certainly.
maybe we can shift gears a little bit and just talk about the role of compliance and specifically what you all can do to help folks as they either evaluate their current technology stack or are considering bringing new components in.
Yeah, no, that I really actually I really like that topic. I think it's really interesting. It's very timely. I mean, obviously, the first thing that comes to mind is AI, which is, man, if you don't slap AI on something, it's not worth anything anymore. Um, I actually attended an MBA conference about that not that long ago, and I found actually surprisingly reasonable adoption frameworks that made sense. Some of the issues that we did see, though, were not always engaging fully with legal and compliance in the decision-making process. If there are two things that really matter, say in that context specifically, it's having some board interaction, making sure that the folks at the top of the food chain understand what you're doing, why you're doing it, that you have the requisite controls in place, and that you have monitoring around that. And then finally, that you know how it works. So if you're using generative AI, if you're using a large language model, that you kind of know how iterative it is, how it's developing, what the changes are that occur along the way. You have tracking for that because there's a lot of unknowns about outcomes from the use of those systems. Certainly, the consistent view today is that they're not going to be underwriting systems because
Right.
the expectation within the industry, the entire framework under which we operate, expects that human beings are part of that, and having AI make credit decisions is probably not where we're headed just yet. But where we do see a lot of value, and I think safe value, is in using it, for example, if you have a captive system with a limited data corpus, you can use that to answer questions for your underwriting staff or for the MLOs that you don't have to have the underwriting staff interface with them anymore because the AI only knows the answers to FHA, VA, Fannie, Freddie, and whoever your
Yeah.
investors are. So you can get some good time savings and some efficiencies out of that. But just make sure that you do really consult with your legal and compliance teams as you integrate those systems into your everyday processes. The other part that I think I would just touch on really quickly is social media, which is a great tool. We know the value of that, and social media monitoring, I would say, is an essential component of any compliance management program. really making sure that you know what your MLOs are doing. They I won't ascribe, negative intent on the part of the MLOs. They're just trying to get the business in the door. But sometimes they're not always cognizant of the impacts of that, whether it's a fair lending issue, whether it's UDAP or whatever it might be. So making sure you have a system in place to monitor what your loan officers are doing, private websites, social media, whatever it might be.
That's a good one to just kind of poke at a little bit, because
Yeah,
it's a heated topic depending on the organization.
sure.
Uh, I've been in federally chartered financial institutions that tend to run as conservative as they can be, and rightfully so for all the right reasons. Um, to the point where in some cases, as a loan officer, you could only put out what I give you, meaning I'm going to
Right.
create this content. It's already been, approved, and that's all you can do. You can't go outside the box. And I think that was fine 3, 4, 5 years ago.
Yeah.
But today the platform algorithms just suppress, they suppress the content that is, seemingly corporate generated, if you will. And there's a emphasis on authenticity, the personality, the personal brand, being the deliverer of the message. And that's a really tough spot to be in from an oversight perspective, I would think, because you can't really say reasonably to someone that's on social. You can only say these words and these combinations, right? Is it
Yeah.
is it more that you're monitoring on the back end and making corrections versus telling them exactly what you can do?
I don't think the goal personally, I mean, even putting on if I were to put back on my in-house compliance hat, would be to tell you exactly what you should do. I think it's telling you what you should avoid
Right.
doing, because, and the way these systems typically work, the ones that are out there now, is that they track what's happening. They produce reports where they see issues that are potentially need to be addressed, and then in-house teams go and look at those, and then they counsel the teams
Yeah.
about what they should or shouldn't be doing. But to me, it's relatively simple stuff. It's the superlatives. It's the things that could result in UDAP issues. It's saying things to consumers that are intrinsically confusing, that
Yeah.
reasonable people may not understand, and it's talking about things for which people may not be eligible, right? Which goes right
Right.
to the heart of UDAP as well. So in essence, sort of indirectly making offers to folks.
Yeah.
So I think that's really a manageable process.
And for the originators that might be tuning in today that aren't aware, if you're on social and you're representing your company, everything you say is something that can be used by a regulator. And so
Yep.
the company is responsible for archiving and having access to it if they get called in to address something.
That's absolutely true. Whether you're a W-2 employee or 1099 or whatever, your pay structure is irrelevant. You're an agent of your
Yeah.
employer. So that's absolutely right.
So we had an interesting opportunity to kind of combine the FinLocker technology with your team's experience in compliance, and it was I think this may have come out of a lobby bar conversation at a conference, potentially,
That's
where all
possible.
good
Yeah.
things happen.
Yep. All good things. That's right.
But you and your team were kind enough to take a test drive, if you will, as a consumer in our friends and family version of FinLocker, and spend two independent sessions with myself and my team, kind of giving us
Yeah.
a readout from your lens as a compliance expert. I don't think we need to go into all the detail here. What I would offer out to folks that are interested, that are either clients of or considering FinLocker, you should talk to Al and his team,
Yeah.
and or if you're evaluating any other technology, frankly, and you want to have kind of a compliance view on it. But maybe for the next few minutes, just give us some insights that your team took away from the FinLocker experience that I know they were very enlightening for myself and my team.
It's you've been around for a while and you think you've seen all the different tools that could be out there, and there's always another tool that you didn't know about. And this was a great example of that. And personally, I found it really interesting, very very exciting tool because I think it really fits well into the current environment, right? Because and you've talked about this before. When you're thinking about client development, we're talking about not who's in front of us today or next month or even 3 months, but a year, year and a half, 2 years down the road. So the utility of it was really apparent to me. That said, I think it took me back to my days as a loan originator, and I thought, man, being that trusted financial advisor, which I think any of us that have been in the role of MLO understand that framework. You remember coaching people on how to get ready to borrow and what they needed to do, and the reality was, particularly in my day, I think today it's maybe equally as true without some of the things you're offering. This was a really subjective process, right? You're reviewing the documents, you're talking about to their credit report to them, and you don't really understand the basis for all of the direction you're giving. Some of that might be, there's some conscious elements to that, and it's a very subjective process. So the thing that I thought from a compliance standpoint, the thing that stood out to me the most was how it first and foremost created a lot of efficiency in using the tool, because you had all that data there. The data was approved to be brought into the system by the borrower. So it's not coming into your hands, it's coming into the consumer's hands. That's
Right.
a much better situation because there's no privacy issues there. You don't run into any RESPO TILA issues with it. So the data is there for the consumer to look at. And the app is providing objective information to the consumer about their readiness, and then communicating that back and forth, obviously with the consumer's approval to the MLO. That is a much better scenario than sitting around with a bunch of documents from a consumer and telling them what you think they should or shouldn't be doing to get ready. And it's a system that's constantly being upgraded. So I think that's a massive risk reduction in my view, and I think it's from a business standpoint, certainly it's putting together a list of potential customers for you that will be available to you, as you move down that funnel.
It was interesting when from my seat when you guys were giving us the readout, and we had to have two different sessions because you guys went into such awesome detail that we ran out of time the first session.
Yeah.
But there was things that you were bringing up that I can tell you, we didn't think about in the design of the product. I guess we got a little lucky in that it ended up that way. But most of my clients, I don't think that way. And so it's since we've had those sessions, I know I've had different talk tracks with prospects and clients, around that objectivity and the analysis that's happened. I love the way you described the consumer permission data in it not being, in the hands of the lender per se. It's the consumer's able to use it and they're armed with it. And so, as I, left those conversations and was really thinking about your company and the services you provide, I can imagine, FinLocker's one, solution that you all could provide analysis and overview and feedback on, but there's dozens of consumer-facing tech tools that lenders use that probably do need to have, a little bit more of a compliance overview, lens on. So I really appreciated that perspective.
I think a lot of the time products get brought into the industry from folks outside the industry that have had kind of tangential connections, and they see some white space and they want to come and bring you something to help with whatever the issue is they've identified. FinLocker has the benefit of having you, which that's a really really important thing. You bring a lot of industry experience and you apply it to the tech tool, as opposed to the tech tool being created and then later on hopefully the industry experience gets there to help address some of the concerns. And consumer facing products are the big issue, right? It's always that side of the process that's the problem. It's not the big servicing platforms or the origination platforms. It's the consumer facing tools.
For sure. Well, this is a continuation of the conversations we've been having. I've enjoyed them. I enjoyed this one. I hope that our audience has learned something, at least a few things that are new to them. Before we let you off the hook, what's the best way for folks to get in contact with you and your team if they're interested in talking to Conforma?
Well, you can certainly email me directly. It's just apitzner@conformacg.com, or visit our website, conformacg.com. And there's some links there you can, click on. They'll connect you to the team, and a lot of information about what we offer. And then we're headed off to MBA Legal Issues here in San Diego in early May. So we look forward to seeing anyone there and talking to folks about what we do and how we do it.
Love it. Al, thanks so much for spending some time here today with us. We'll probably have a continuation conversation, because I think this is this intersection of tech and compliance is only going to get more amplified and more important. So I appreciate your time this morning.
Thank you, Brian. Thanks for having me on. Appreciate it.
Thanks, everybody. Come back in 2 weeks for our next episode of FinTech Fridays.